What's up everyone, my name is Anthony and this video is going to be a very important update on the current status of the markets, especially the SP 500 as well as the Nasdaq. So first I really want to start off with the SP 500, which is reflected by the index SPY over here, and I have some really important information to tell you in this video. I'm going to break down to you exactly what I think is going to happen over the next couple of weeks or so, and then what's going to happen over the broader long-term time frame. So first of all, if we look at the technical analysis and the wave counts, over the broader term, we have this wave 1, 2, 3, 4, 5 forming. So we're in this very broad term wave 5, and we're finishing off this huge bullish market run since the end of that COVID crash here. And within this wave 5 here, we can further subdivide. So I'm going to jump down to that 30-minute time frame here. We're going to zoom in a little bit on this broader term wave 5. So overall, we can see this wave 1, 2, 3, 4 right here, and then a 5 upwards up here, this one right here. So, and then within this wave 5, which we're currently in, we have this wave 1, 2, 3, 4, 5. So as you can see, we're very close to the end of this bull market run. We have a bunch of nested wave 5s. But the main thing I want to focus on for this video is the price action that we've seen over the past couple of weeks or so right here. So we're going to zoom on that, and we're going to go down to the 15-minute time frame. So overall, if we recap what's going on over the past month or so, we see an impulsive structure forming. So a wave 1, 2, 3, 4, and then a wave 5 up, just as part of those nested wave 5s that I've been talking about. And within this wave 4 right here, we had that complex correction, so WXYXZ. And this is simply just the market's way of stalling out time and moving sideways for an extended duration, which is exactly what we got here. And after we finished this Z wave to finish off that complex correction, we got a wave 1, 2, 3, 4, 5 upwards. And that's what we're currently working on. And this is the count that I'm mainly focusing on in gold and yellow here. But there's a thing to this count that is very unique. So while these structures take on 5-wave moves, so we can see that 5-wave structure here, the individual components, so these wave 1s, 2s, 3s, 4s, and 5s within that diagonal structure are very different from what you consider a traditional impulse wave. So as you know, if you have a regular impulse wave like this, so 1, 2, 3, 4, 5, their wave 1s, 3s, and 5s will form also 5-wave structures, and your wave 2s and 4s will form 3-wave structures. However, in an ending diagonal, expanding ending diagonal, your wave 1s are 3-wave structures, same with your wave 3s and your wave 5s. So every single wave in this structure is a 3-wave structure. So nothing is impulsive about this, although it has that 5-wave structure. And what happens is wave 4 overlaps with wave 1 price territory. So this goes against what your traditional Elliott wave impulse structure is. That's why these patterns are relatively rare. You don't really see them that often, especially in the markets. These are not as common. But because we're approaching a bull market top, so this is from the huge run since the COVID drop, we're trying to top out here. The markets are not going to easily give away that bullish momentum. As you can see here, if we map up the price action over the past couple of months or couple of weeks or so, we start up with this up or down, up, down, up, down, up, down, up, and then as so, and then we're coming down again. So if you look at this price action, this is extremely choppy. We're moving sideways, we're going huge swings in either directions, and this is exactly what you expect to see at the top of a bull market. So, for example, we're not going to easily give away any of this bullish momentum that easily. So I want to bring out a warning that this downwards price action that we've seen over the past couple of days or so, so we've had a pretty substantial drop in the markets, almost a 3% drop, and this is triggering a lot of people to turn bearish and buy puts on the market, for example. And this is what's going to form what you know as a bear trap. So when people think it's going to turn bearish, the markets, they're going to be like, oh, this is the top. We've hit the top right here. Markets are heading downwards to like 300, for example. This is going to trap them. So they're going to buy puts. They're going to short the market. They're going to short everything. And when stuff starts to bounce, so over here, when prices start to bounce at these levels, they're going to start covering their shorts. And this is just going to push the stock price up. And this is why you get that really strong push to the upside for that wave 5 within an expanding ending diagonal. So this is the psychology of what causes this pattern to form in the first place. And I'll break down exactly what levels you can expect that bounce to be at. So the rules for an expanding ending diagonal are that each wave has to be larger than the previous one. So when I mean that, I'm talking about the wave 3 over here has to be larger than the wave 1, and the wave 5 has to be larger than the wave 3. And similarly, the wave 4 needs to be larger than the wave 2. So now if we take that knowledge, we expand some Fibonacci extension levels, so the wave 1 onto the wave 3, so like this. So we see that wave 3 topped out right at our expected targets, so just 1.618 to 1.414, so that was perfect. And now, if we look at our wave 4 price projections, we take the length of wave 2 like this, and we drag it down to the top, or up to the top of wave 3, and now we get some really common levels of stopping right around here. So we know that the wave 4 has to go lower than 413 to make this wave count valid, because we need wave 4 to be longer than wave 2. So thus we have to have wave 4 go under 413. And I don't think it will bounce exactly at 413. I think it will go a little bit lower, so around 410. And this is an extremely good buying zone, and we'll push upwards for that wave 5. And this is where a lot of bears will get trapped. People that are thinking the market has finally topped out, and they'll start shorting it right here along this area, and then they'll get caught up here, and then we'll head upwards before crashing down for that bear market one more time. So, like I said previously, markets are not going to give up a bull market run for the past year, and also we've had a bullish market run since 2010, and this is the relative area of pretty big topping, so I expect a lot of downside after we hit this top, so markets are not going to give that up easily. And as I've drawn out, price action is going to be very choppy, but you can take profits and make a lot of money off these huge swings in either direction, and I think that this is setting up for a really good opportunity to turn bullish. I know this is pretty controversial because a lot of people are thinking that markets are going to turn bearish now. They're all because, for example, a lot of people that are like EMA traders, all the EMAs are going to tell you that you're turning bearish. You're starting to turn bearish because stuff is falling under EMAs. If I go into like a larger time frame, especially, things just crossed under EMAs because we had that bullish or bearish price action and that drop in the markets, and this is going to cause them to buy puts. But this is what's going to cause that huge impulsive, or not non-impulsive wave to the upside for that wave 5. And typically, what you see in these expanding ending diagonals is price action to go like this. So wave 1 up, wave 2 down, wave 3 up, wave 4 up, down, and then wave 5 will at least touch this upper trend line, and sometimes it can actually go over the trend line and then crash. So if I extend this further, what can happen is that this price action will actually overflow the trend line, go up here, and then start crashing very heavily. So you can even get more bullish momentum, even up to the 440s if you really, if there's a lot of buyers that get tricked into this. And over here, at these levels, this will be a bull trap. So down at these levels, you're getting a bear trap, and up at these levels, you're getting a bull trap because the markets are going to turn bearish here and then kick a lot of people out of their positions. But over here, if you turn bearish, around these levels, you're going to get caught up and lose a lot of money, especially if this wave count, if we do get a bounce at these levels. Now, there is an invalidation point. So if wave 4 goes under the wave 2 low right here, so right around 405, then this count is no longer valid. So I want to throw that out there. But for now, I do not really see an alternate count to this one right now. There is really no alternate count because, for example, we do need to finish off all these wave 5s. And this is the only count that will let us do this right now. There is no count that I can see, no matter what you diagram out previously, that will cause the bear markets to be forming and starting right now. We need that last push upwards before we come crashing down for the bear markets. So I want to throw out that really important reminder to not get trapped bearish right now. There obviously needs to be a little bit more downside, so maybe like a 1% or about a 1% more of drop. So technically, if you really wanted, you could squeeze a little bit more money out of puts. It's down to these levels around 410, but I would not count on that because we're going to start getting a bounce at these levels. And in terms of dissecting within this individual structure, so dissecting these wave 1s, so if I zoom in on this wave 1, we have that ABC move upwards, so ABC. Then this wave 2 down, we also have that ABC formation here, so ABC, like this. And now if we look at this wave 3, I've already diagrammed that out, so we have that ABC up here. So the A wave formed that 1, 2, 3, 4, 5 move. The wave B formed that complex correction, WXY. And our wave 3 also formed kind of like a weird impulsive structure, so maybe like a 1, 2, 3, 4, 5 upwards. It's not really important to dissect that individual structure here. It's very complicated and pretty choppy. And now downwards for this wave 4, we should see a similar ABC structure, so something like maybe ABC like this. And I've already showed you what levels that they are most likely to bounce at, so let me do that again. So I expect a huge buy zone anywhere right here. So this would be a really good opportunity to get into calls. I would maybe lower this a little bit, so buy maybe around 411, 412 to 410. This is really good in my opinion for buying opportunities. As you can see, because this wave 5 needs to be longer than wave 3, which is already longer than wave 1, there is a lot of upside to this move. And this is going to be from all those bears getting trapped into their positions and buying back in after shorting. So as you see with like AMC, for example, GameStop, all these short squeezes, we're kind of getting that version in the markets right now. Because people are getting trapped bearish and they have to cover their shorts at once stuff starts bouncing off and cutting and triggering their stop losses. And this is what's going to push the markets upwards into most likely all-time highs, and then coming down for the bear markets. And we'll never see these levels again for maybe a year or so, or a very long time at least. So this is the last time to get into a bullish position, in my opinion, and we're going to see some heavy swings to the upside after we hit these levels, in my opinion. And I'll definitely keep updated with this wave count as well as all the technical analysis in the Discord as well as here in the YouTube. So yeah, stay tuned for that. And this is just my heads up of what we're seeing. And just in terms of this dissecting this wave 5, we'll see that similarly, we'll see that ABC structure, so ABC. And yeah, so when we get to these levels and we start bouncing, I'll definitely keep updated. And in terms of long-term price targets, so I want to go down to the 1-day time frame actually. And I want to show you how, actually let me go down to the 1-hour time frame. And let me show you how we can derive some final price targets. So I've already done that here. So as you can see, these levels are showing up at 438. So if I break down this price action, so I don't know why these are all the way here, but okay. So yeah, I think TradingView likes to mess around with the counts a little bit, or mess around with the diagrams, which is weird, but it's fine. So let's take this extension level of the wave 1 down to the wave 4, bottom right here. And this is where I get the price levels, as you can see, that are forming. I'm showing you right here. This is exactly how I got them. And as you can see, since we're finishing off this huge wave 5 to the upside, we expect that wave 5 to finish somewhere around the 2.618 extension levels, because this is a huge bull market run. We're going to be very extended for the wave 5, and markets really like to keep pushing and pushing upwards until something really knocks it down. And that's why we see a lot of volatility and sideways up and down chop. So 438 is one of the main price targets, especially in terms of huge Fibonacci extensions, and that could be achieved by the overthrow of the trend line that I showed you previously. So if we do come down here and then bounce up really strongly and then push overflow and then fall all the way back down, so that's what you would expect to see at a market top. That's what really happens. You don't just get bear markets starting now. So if I go back down to the time frame, this mini time frame, these are not the start of the huge bear market. It just doesn't work like that. Markets don't just simply turn bearish like that. You have to really have a lot of choppiness. We've already gone on that, but we haven't had that really decisive swing to the upside before coming crashing down. So if we do have this really volatile price action like this, and then back down, that would look like a market top, and that would conclude your huge bull market run over the past couple of years or so. So over here, so we had that bullish market run since 2009. If I get rid of all these drawings, so this huge increase up here, same with the COVID increase. If you're having this really large movement to the upside, markets are not going to give that up easily. They're gonna trap a lot of people, trap bulls and bears, and make people lose money before finally going down. So I want to throw a heads up that we can make a lot of money off these decisive swings, and I'm definitely looking to be playing calls and not puts, because I see a lot of people trying to play puts right now and calling it bearish, and the markets have topped out. So I don't think that's the case, and I will definitely keep updated. So now that's my opinion about SPY, a really huge update and a really important update in my opinion, to not get trapped bearish in this situation. So in terms of the Nasdaq, so this is the triple Qs. So we can see some sort of impulsive structure forming. It's not as clear to me because the way the structures turn out and look are not as impulsive-y as you would expect. So that's why I don't want to really focus on the Nasdaq as much as the SP 500, because this is forming a very, like a very rare but cool pattern that will trap a lot of people, and that's a place where you can make a lot of money. Because as you know, when you're trading, you're essentially making money off other people being wrong. So the more people are wrong, the more you make money, because that's why you see that wave 5 will push really heavily upwards. So if people are wrong, they'll start selling out of positions, and that's what will boost prices upwards. So if this count does happen to be incorrect, and that is definitely a possibility, I don't want to say this is 100% accurate. Obviously, no one can predict the market, but yeah. So I will definitely keep updated. We do have a very easy invalidation point at 405. If markets do come crashing down and they do not recover from this area, then I would say that this count is definitely invalid, and I would look to adjust my counts thoroughly. But for now, so far, nothing really has changed as much, and I'm just really dissecting the price action and explaining it as much as I can in this video for you. So back to the triple Qs. So we have an impulsive structure forming, so a wave 1, 2, 3, 4, 5. The main difference about the Nasdaq versus the SP 500 is that we're not really seeing this weird ending diagonal pattern forming. We're just seeing some kind of traditional impulsive wave. And this makes sense because if we're expecting the S&P 500 to be bullish, we also would expect the tech sector to be bullish because both kind of follow each other and stick to each other. Although initially I expected tech to be a little bit less bullish than the SP 500, in terms of the flash push to the upside, I do expect that same mentality as well because this wave 5 upwards will be pretty momentous because we do have to kind of touch that upper trend line. There is a very, very rare chance that we get truncated around these levels. So the wave 5, there's a possibility that it could come up to here and then fall. That is definitely a possibility, but that's like a 1% chance. I think it's happened very rarely in the past. Most of the time, you do come up to at least touch this upper trend line. And either way, even if we do get truncated here, there is still a lot of upside left. As you can see, if we do bounce upwards around 410, if we go up to 425, that's a 4% gain right there in terms of the market. So this makes sense according with the Nasdaq. Both are expected to be bullish over the next couple of weeks or so. So this is not a time frame of multiple months. This is a very short time frame. I expect both of these indexes to be bullish and very weird bounce over the next couple of weeks. And then within a month or so, so I've always said July, August, that the markets will turn bearish and start that bear market downside. I'm still sticking to that. Nothing has changed about that. I've had that time frame set more than a few months ago, and still everything isn't set to occur at that time point. But for now, over the next couple of weeks or so, I expect things to be bullish. And as you can see from the Nasdaq, we kind of have that wave. Let me diagram that out here. So wave push 1, 2, 3, 4, 5. And that would make sense with your S&P 500 index. So that's just going to be updates on the markets. Things looking bullish after we hit some key levels. So just a little bit more downside over here. So if we do gap down, just maybe 1% more downside to kind of push off these lows. And then coming up for that ending diagonal final push to the upside, that would complete all of your nested wave 5. So we have all this nesting right here, and then we would come down to the bear market. So I hope that made sense. I know there's a lot of technical analysis and a lot of really weird wave counts. You don't really see these as often, but that's just going to be my updates. Feel free to let me know if you have any questions or need any clarifications. And as always, I'll keep you updated if anything changes or if I see something getting invalidated, I'll let you know immediately, especially in the Discord. So thank you so much for watching, and I'll see you in the next video.